So property market growth globally moderated in 2015, but are there still opportunities for Malaysia, perhaps in the London market? For more, we're joined by Alistair Meadows, head of Jones Lang LaSalle's Asia Pacific International Capital Group. Now, in recent data we saw London was the third most expensive city in the world, but there's still a chance for it to outperform other European cities when it comes to investment prospects. What does that mean for a Malaysian investor and their prospects in this market?
Well, we see that London has been a major recipient of global capital over the last 5 years. Last year, there were £18 billion of commercial real estate transactions in London. And during that 5-year period, Malaysian investors have played a big part in the London commercial investment market, enjoying very good risk-adjusted returns. And in spite of some of the economic and political headwinds that we see globally and indeed in the UK, we believe that the economic and real estate fundamentals mean that there continue to be good prospects for Malaysian investors into the London commercial and indeed residential markets.
Now, recently we saw the developer of the Battersea Power Station say they want to downsize the units there, given that larger offerings are not seeing sales as robustly as they would like. What does that mean then when it comes to the makeup of the property market in London?
Well, there is still a structural imbalance in the London residential market. In short, London is not producing enough housing based upon the demand that exists in London. So I think that's really a reaction to maybe adapting the size of the units to cater for that demand, which is changing, but fundamentally is still strong in terms of the London residential story.
And when it comes to the commercial market, what are the yields looking like as compared to historical averages, and are there opportunities there?
Well, based upon a set of global gateway cities, London still proves to be attractive with prime yields around 4%, when certainly compared to Asian cities such as Tokyo, Singapore, and Hong Kong. And also with low historic levels of debt, cost of debt, the cash-on-cash returns still prove to be attractive on a risk-adjusted basis. Also set against still robust tenant demand, we are seeing strong rental growth. So combining both, we still feel that there are very solid fundamentals that will drive returns in the London commercial market.
And Alistair, how much of a concern is the potential Brexit for investors or clientele that you've spoken to when it comes to the UK market?
Well, it's certainly a big talking point right now. And what we've seen in the first quarter, and I think we'll see right the way through to the referendum in June, is a wait-and-see approach from investors. The fundamentals of the real estate market and indeed the UK and London economy have not changed. But I think with the uncertainty around Brexit, what that'll mean is that we'll see a dip in trading volumes in the first and second quarter. But certainly from a JLL perspective, we would expect Britain to stay in the EU and the second half of the year to see a bounce in trading volumes as the capital reinvests into the market.
Now, taking a look at where investors, broadly speaking, should be putting their money, of course, they're looking for high yield in the current environment that we're in. Property performance, we're seeing that outstrip equity returns. Where in particular, when you break it down by region, can we find these types of returns?
Well, if we look closer to home and look within the Asia-Pacific region, Australia has proved to be a major destination for Malaysian and indeed international capital. Why? Well, Australia's had 24 years of successive GDP growth. So it's a very stable economy, even through the global financial crisis. Also, in the current interest rate environment that we're in, investors are on a global hunt for yield. And certainly Australia, on a relative basis, offers higher commercial investment yields than the markets elsewhere within the region. So as a consequence, we've seen a lot of capital invest from Malaysia into Australia, both in the commercial and indeed the residential sectors.
Now, recently, Alistair, we spoke to a guest who told us that in Malaysia, at the very least, the per square footage upside for the property here, there still is some room to move higher. How do we compare, or perhaps what about in the rest of the region, which is looking fairly attractive then to a global investor?
Well, correspondingly, we're also seeing European and US investors and other investors in Asia looking closely at the markets within Southeast Asia. Ultimately, if we look past some of the short-term headwinds from an economic point of view, there is no doubt that the ASEAN bloc is showing very strong economic growth prospects over the next 5 to 10 years. And Malaysia is very much part of that story. So we continue to see interest from our US, other Asian and European clients to look at investing into Malaysia to benefit from that growth story over the next sort of 5 to 10 years, particularly when you look at it from a capital value per square foot or per square meter basis relative to the other markets, both within the region and globally.
Now, just today, Moody's putting out a note saying that there will be economic growth divergence within ASEAN. But looking more closely at Malaysia, we had some news flow around Bandar Malaysia, a fairly substantial project there when you consider the GDV, with the potential pipeline for commercial and residential space in the KL market. Would that put pressure on yield and rental rates?
In the short term, yes. We're certainly seeing some challenges in terms of the supply pipeline from a commercial and a residential point of view. But ultimately, if you subscribe to the longer-term thesis of economic growth, that supply, we believe, will be absorbed over the next 2 to 3 years. And as we know, real estate is a long-term game, and therefore we feel that investors who are prepared to take a long-term time horizon will see beyond some of the short-term supply challenges.
All right. Thank you so much, Alistair, for your comments this afternoon. That was Alistair Meadows, Jones Lang LaSalle's head of International Capital Group in Asia Pacific.